Okay, Tyler Crow, I'm going to start us off with a screen share here. We're going to talk about some solar stocks. Take a look at these three super popular ones. We've got Enphase Energy, First Solar, and Canadian Solar, all down between 35%, 65% from their 52-week highs. We know that the secular opportunity for solar is big. It's huge growth, but this is a cyclical industry. Tyler, are you ready to talk about these three and whether or not these are buy on the dip opportunities?
If people know me, I think they already know what I'm going to say. But yeah, let's talk about it.
Well, I think you might surprise us. There's some interesting things. I'm Jason Hall. This is The Smattering. The Motley Fool sponsors our videos. And if you're looking for even more great stock ideas, be sure to check out our special link, fool.com/The Smattering. The Motley Fool is going to give you its 10 best stocks to buy right now. Please check that link after this video. Okay, Tyler, think about where we are with solar generally. Over the past 40 years, the cost per watt to produce them, I should say, has fallen like 99%. It's incredible how much cheaper solar panels are now. And we've gotten to a point where solar is competitive with even the cheapest, newest, efficient natural gas as a source of power. We have great stuff going on with energy storage. Everywhere around the world, there is focus on reducing carbon output, concerns about climate change, lots of economic incentives behind that. Here in the US, we saw the Inflation Reduction Act dedicate tens of billions of dollars towards renewable energy. Yet here we are. These stocks are down big because, say it with me, people, sir. What's going on, Tyler?
You explained it very deftly there. The idea that solar is just an up and to the right story. When you pull back on it long enough time horizon, yes, that's very true. But you start shortening those cycles, and all of a sudden you start seeing this.
Yeah.
Because this is for as we can talk about the development and all of the things that you just mentioned of it being attractive, but let's get down to the brass tacks of this business. It is a brutal business to be in as an actual operator, as a seller of solar panels, a seller of equipment, because it is one that is a race to the bottom in terms of costs. It's like you said, costs have been coming down. When costs come down, you have to be better at it or your margin is going to get wiped out. And that's been the case for years. Like they've had to bring down costs 90, 95%. Just imagine if you were like, I don't know, McDonald's and be like, I need to reduce my cost by 95% over 10 years. Is that going to happen? No,
Doesn't happen, right?
it
It,
doesn't happen.
it's remarkable. And the reasons that happened is because, of course, this was a nascent technology and it's become a mature technology now. And costs are still falling, but they've certainly, the cost curve has certainly smoothed out, right? And we're not seeing those same sort of year on year decreases in
Right.
cost. But the big thing, it's become competitive with fossil fuel. That's hugely important to this story. What I would like to do is, again, we're shifting. These aren't tech, they're to a certain extent, they're technology companies in the way that every manufacturer is a technology company, but they're primarily their focus, particularly for First Solar and Canadian Solar, they're manufacturers, right? They make their money on the margins of scale and output and efficiency and getting operating leverage. Right? That's where they make their money. So here's what I would like to do. Let's start with Canadian Solar. I'm going to ask you, is this a buy, sell, or hold?
But you mentioned all three of them at the top, and I think of all three of them, this is the one to me that, at least from a pricing perspective and evaluation perspective, looks the most attractive. If you go through a lot of one of the things that makes Canadian solar so unique and difficult to value and understand is like with compared to say First Solar. First Solar just makes panels. They manufacture panels, they make a margin, they sell. That's all they do now.
And they're
Canadian
even more
Solar,
targeted than that because they make panels exclusively for the utility scale market. They don't make rooftop panels. They don't make panels that go on top of shopping malls. These are
no,
utility scale solar panels
yeah.
focused for that market.
People are buying in the multiple megawatts or even maybe even gigawatt. We're talking hundreds and hundreds of panels all at once rather than, oh, I'm going to put four on my house
No,
sort of thing.
thousands of
Just,
panels at a time
yeah,
here.
it's a whole different ball game. But Canadian solar is a little different in that sense of it makes utility scale solar panels. It has some residential commercial production, but it also has an in-house construction and development business. And this is what Canadian solar often overlooked and many times misunderstood.
What
And
does that mean
because
and what does it do to the business?
it makes it very lumpy. And we've heard this term before when we talk about businesses. Oh, it has lumpy cash flow. Normally means like seasonal, right? Where it's like it has a retailer. It gets a lot of its sales right around Christmas time and then it wanes in the springtime or something like that. We think of that as cash flows being lumpy, right? But with Canadian solar, that lumpiness can last 18 months, 24, 36 months or something.
I'm going to pull up a screen share of its revenue. You see these ups and downs where the revenue
Yep.
falls, right? These are true declines. cyclical nature of the utility scale industry, the concentrated cyclical nature when you're also a developer.
Right. So what is those dips are not necessarily like the business stagnating, but what it actually typically much more as a signal of is in the prior 12, they had a large sale of an asset. And because of that, when it sold a developed asset to, I don't know, a utility or an independent power producer or something like that, it was able to net that cash, recognize that revenue, and then move on to the next thing. And so that's why it tends to look a little bit lumpier. But because it has scaled up its manufacturing so much, that development arm is becoming a smaller and smaller part of the business. And as a result, revenues are becoming a little bit more consistent. Cash flow is still lumpy. But all of that said, it's a relatively efficient producer of panels, and this thing is selling at a bargain bin price. It currently trades for a trailing price to book value. It's trading for 0.6 times. So basically, the market is saying that the assets on the books are worth about 60% of what their stated value is on the books. That is a huge discount and not something you often see, especially in a business like solar. So because of its valuation, it's the unique value proposition at this very moment in time, I'm most attracted to Canadian solar.
It's pretty rare for it to really ever trade much of a discount, if any discount to book value. It typically trades for some sort of a premium to its book value. That's Canadian solar. I'm going to take it in a different direction here, and I'm going to talk about one that, so as much as the stock is down right now, I'm going to share a chart here from its all-time high. It's down 65%. But if you look at this over the past 10 years, it still generates 4x return. Tyler, this has been a huge winner, and that's, of course, Enphase Energy. And I'm going to make the buy case for Enphase. Enphase has done a really wonderful job of maintaining market share and even growing market share, not just in the US, where a regulatory environment has been very favorable in terms of building code, but they've been able to take those products into international markets and take market share there while also continuing to maintain very, very high margins. I think there's a couple of reasons they've been able to do that. One of the big reasons is because they've done a really good job of building out relationships with solar panel manufacturers, right, as a supplier. And that's really important, part of the top of the filter. And then also working close with solar panel installers, large installers, regional installers, really doing a good job of knowing who your buyer really is. And when you're this kind of product, it's really not a homeowner, right? It's not the commercial decision maker at a large retailer that wants to do solar, right? Distributed solar. It's the installers, right? That's so important. It's the manufacturers, because you want your technology and their technology work really well together. And even if you can have them included with the panels when they send it to the distributor or to the installer. So they've done a wonderful job with that. A company, Trex, I think there's some similarity with how they've done a good job with really making sure they're in front of the professionals in the industry that are really their sales force, as much as with consumers themselves. They've also done a really good job of leveraging contract manufacturing that's allowed them to, maybe their total revenues aren't as good, but the margin profiles that they get are reflected, right? These businesses are enormously profitable. The next part for me, and we've used the term electrification of everything, and that continues to be a really good tailwind for Enphase because of other things that Enphase is doing. They have EV chargers for the home. That's a small upsell that they can include. And again, having those relationships with the installers is really, really valuable in terms of the add-on. But even more important than that is batteries, energy storage. As we see more people deploy, and as the regulatory frameworks in different states in the US create incentives for energy storage, we see the upsale to energy storage with the solar system increase. In states like California, it's at a very, very high rate. It's well over half of residential installations come with energy storage as well. And that's great for Enphase. Enphase has done a really good job of being really a leader in that home energy storage market. And as we see more regulations path for reduction of new construction in some states, you can't have natural gas. And I think that's going to create more incentive for things like energy storage. So there are a ton of tailwinds for Enphase. It's well positioned. I don't think the stock is cheap. I think it's priced reasonably. But again, if you look at those tailwinds, I think looking at the long term, I think to me, it's a buy at this price. Now, we got one left here, Tyler. We haven't talked about First Solar. This is a company I own. This is a company you own. It's done really well for both of them. What do you think? Is it a buy here?
All the things that we just said previously when we were talking about Canadian solar applies. First Solar has been arguably one of the best capital allocators in this business. It has known when to grow and when not to grow, and has been very prudent about not leveraging up using debt to manufacture a bunch of new facilities and then all of a sudden get whacked when there's oversupply in the market. They've nice tight balance sheet, always hold a ton of cash, being ready to deploy when it needs to actually spend money on capital. expenditures. So all of that is very good. But right now, it's
And
currently
another
trading for
thing I want to say about them, Tyler, I think is important is we've seen other companies in the solar industry have increased their vertical integration.
no, they ain't got time for that.
They've
They
gone
ain't
the
got
other
time
way.
for that.
They've gone
They're a
the other way,
manufacturer.
right? They've sold off assets, they've spun things out, and really become more and more focused on what is their core business. And that gets to the key of capital allocation. You started to say it before I cut you off, though. Mature industry valuation matters. That says Canadian solar is cheap and is deeply discounted and is a buy. That's not the case for First Solar, right? This is not a cheap stock. It's maybe not expensive, but it's
No.
certainly not cheap.
No, I think a lot of people might look at the 14 times forward price to earnings ratio and say that's cheap relative to the market, but we're a cyclical industry. Cyclical industries, you want to pay a discount to the market because the market it's not as cyclical, right? If you know it's going to be cyclical and you have a chance of a downturn, you want to pay less. And so at 14 times earning, 2.7 times trailing book value, those are kind of market premiums that I, as a investor wanting to add new money to positions, that is not an attractive enough value for me. Not enough that I want to sell my position yet, but certainly not one that I'm ready to be backing up the truck, if you will,